Both the macro and short-term charts are suggesting a large move is brewing. Where will Bitcoin go next? When will the consolidation phase end? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you all are having an absolutely fantastic weekend. We're here to take a look at Bitcoin from a macro and short-term perspective. The charts are suggesting a large move is brewing. In today's video, we're going to be talking about exactly what that could be. We'll be reviewing these two charts. You can see on the screen right over here, our weekly and monthly chart. We're also going to be talking about a smaller time frame on the hourly and even going down to the 30-minute chart, discussing the current consolidation we are seeing over the weekend. Before we do get into the video, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, the economic news, and relevant news events. No hype, no BS, no emotion, pure raw TA. That is the kind of content you're interested in. Go ahead and join us on Telegram. This will be the second link down below. You'll get access to updates, charts, videos, educational posts, news events, economic data, and everything in between to keep you in the loop with not only Bitcoin, not only cryptocurrency, but the relevant economic data as a whole. If you are interested in joining our VIP channel, we post trading signals such as this one over here with exact entries, exact targets, exact stop losses with charts, justification, and education. You can go ahead and contact me via the free channel. Click the links at the top. Scroll up to find this message here. You can find our entire trading track record. We have 29 months of trading track record, around 80% win rate. And of course, you'll find all information about that. If you're interested in joining that main channel where we post our trades and our exclusive group chats with all of our members, you can see over here, we have many group chats going on the left-hand side. You can go ahead and contact me. Let's get into a video without further ado. Starting off with the market data. How are we looking? Obviously, the weekend rolls around eventually and the volume dries up. It's not really too unheard of. It's pretty standard now, guys, across crypto that, the weekend does dry up a little bit in terms of volume. And we can see now that the volume is only sitting at 38 billion. This is pretty representative of not only weekend price action, but compression and consolidation, which we'll see visibly on the chart in just a moment. Looking at our liquidations, we go down to around 29 million, down around 10% in that last 24-hour period. For the month of July, we are officially in the red, but very marginally around 0.5% in the red. And as I was talking about liquidations dropping down, volume dropping down, and consolidation, we can see that now visually representing itself on the chart as a nice strong sideways symmetrical triangle consolidation with very, very clear retests for support and resistance on either side. We'll come back and discuss what this means on the smaller time frame and what it means when relating it to like the 4-hour or hourly chart for the higher time frame when we get into it in today's video. Moving on to those liquidations, we can see out of the 30 million, we're very, very even between longs and shorts. Again, very standard stuff when we see these horizontal consolidations, whether it be in a horizontal range or whether it be in a symmetrical triangle, anything that is more or less pushing sideways with steep swings, compressing as it goes. We do generally see both sides get chopped up. Moving on to the DXY. We saw a pretty violent end to the week for the DXY with NFP data coming out and unemployment data coming out relatively bullish. We saw the DXY drop toward the downside. In fact, we saw it drop basically until market close, retesting our current support level. It's going to be very interesting this week to see what the DXY does. Will we open at support or above support, or are we going to be pushing directly through it? What I can say is if we do push through it, this is not going to be very healthy for the markets. If we do push through it, this will be relatively healthy to markets. We could see a little bit of a rebound, but if we do bounce upwards here and break this dotted trend line, we do expect more blood to flow. Moving on to the S&P. Not looking too amazing here as it hasn't been for the last few days. We have seen a nice strong double top at resistance over here, slightly higher high on that price action chart, with of course falling momentum representing nothing less than a bearish divergence. This bearish divergence happening at a relatively important level. Of course, not only do we have this massive chunk of resistance over here sitting at that 4,500 horizontal and psychological level, but we do have the uptrending diagonal resistance as represented by the current market structure, which is of course a rising channel. This is a bearish structure, meaning it's an uptrend until the uptrending support line is lost. So when we have this uptrend over here represented by the arrow lost, the price will enter a move toward the downside, which will be quite aggressively. If we took a measured move from the width of this channel, that is the move we expect from the breakout point. Depending on when the breakout occurs will determine how low the measured move will suggest the price action could potentially go. However, if we are able to break above this level of liquidity, get that top side liquidity and hold above it, we do have potential to push even higher, although this scenario is less likely than a scenario where we retrace down to the lower range of this channel. The Dow Jones looking quite similar. We can see our volume delta is dropping down, suggesting again we have decreasing volume. Momentum is falling. We can see momentum is coming downwards, and we can see a lot of contention around that horizontal resistance, representing a failure to break above there initially, but we could eventually retest it again. What we're looking for is, of course, this weekly trend line, this dotted trend line to hold as support. A weekly candle underneath that as a closing candle will not be too favorable. Let's go ahead, guys, and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Start off on a smaller time frame and work our way up to the higher time frame. Before we do that, let's really quickly talk about the key relevant levels from a horizontal and diagonal standpoint, so we know the importance of what we're talking about. Then we'll break it down to these structures. So currently on the higher time frame, the most significant levels at the moment are as follows: 31.3 to 32,000. This is our significant resistance, and our most significant support on the higher time frame is going to be 30,000 to 29.8. This is our significant support. Pushing below there, we have a weekly significant support, but we'll talk about that one when we get into a higher time frame analysis. So focusing just now on our upper and lower support resistance as per the chart. Moving on from there, we can see our current structure. We have a very clear uptrending diagonal resistance retested 5 times, and we have a very clear uptrending diagonal support, again, retested numerous times. As we can see, we are pushing under and consolidating sideways just underneath this diagonal level, as represented by this diagonal resistance and of course the current downtrending resistance of our symmetrical triangle, retesting that range twice now as a rejection. So currently the price is slightly more bearish on this chart, as we do have, number 1, a breakdown of our structure, number 2, retests of that uptrending support as a resistance, and number 3, a slightly bearish symmetrical triangle forming underneath that support level, which we'll discuss in today's video. For the higher time frame, we do still have that 30 to 28k support, which does need to hold. We're going to go ahead and come back to this higher time frame in just a moment, but go down to the 30-minute chart and discuss what is happening. So what we can see over here is a very important consolidation, and I do want to point out we do have our POC sitting around here. We'll come back and discuss that in a second. We have a symmetrical triangle formation. I'm going to go ahead and bring up a few indicators as we discuss this, just because we'll come back to that in a moment. Our symmetrical triangle formation is represented by a uptrending and downtrending diagonal trend line, which converges as time goes along, meaning their width decreases, right? This represents compression, it represents decreasing volatility, decreasing momentum, decreasing volume, which we are seeing as per the charts, right? If we take a look at these levels here, we can see the overall volume is decreasing ever since we created that first high. We've got that first high over here, okay? We've got the second high over here, we've got the third high over here, we have overall decreasing volume. If we're looking at our momentum, we can see we are overall steady, all right? The RSI can be quite deceptive sometimes when you're looking at high points, because it's not really a reflection of the price, it's a derivative of price representing momentum. So when we go zoom out per se to like an hourly chart, we can see the overall trajectory for this is still very much down. If we take a look at these high points, conveying to these high points, we are very much down. However, we don't really have that strong negative momentum shift we're looking for just quite yet, but we'll come back and discuss why that's not too important, and of course, what will happen if we do get it later on in today's video. So let's go back to the 30-minute chart and talk about what is happening. So as we can see, we do have that symmetrical triangle formation. Now, a symmetrical triangle formation is a neutral pattern. It is a horizontal consolidation. However, neutral patterns can still have slight advantages or preferences to certain directions. So let's talk about that. If we see the price enter a symmetrical triangle or a pennant formation from the top side down, it is more likely for that trend to continue. Factoring in the fact we not only have this symmetrical triangle, but the position of the symmetrical triangle is sitting underneath our consolidation or diagonal resistance as per this rising channel formation. So we do have precedent to believe that not only do we have a slightly bearish symmetrical triangle, we have a bearish trigger being not a bullish trigger, meaning this uptrending diagonal level, meaning this level is acting as resistance. And for this chart to flip bullish, we need to not only break out of the downtrending diagonal level, but of course we need to break above the uptrending diagonal level, as this is acting as a resistance and this is acting as a resistance. We have two separate resistance levels converging at this point. If we had to take a look at the measured move, we take the width of our low to high, we apply it to a perceived breakout point. If we want to be conservative, we can actually apply it to our fifth point, our final point of retest. That will tell us the distance in which we expect this move to occur. If we do get the breakdown of this trend line, we will expect the price to push under 28,000. Why is 28,000 important? Well, if we lose 28,000, we're going to be moving strongly and more aggressively toward the downside. We'll come back and talk about that in just a moment. Let's talk about what happens if the price pushes upwards. So as it is a symmetrical triangle, there is always a chance the price can move upwards. And I want to make sure everyone's aware, nothing in trading is certain. Everything comes down to a game of probabilities. The probabilities here are in favor of a move down. The volume is falling, momentum is falling, we're in a neutral, slightly bearish pattern, we are underneath strong diagonal resistance, but we do have a chance to move upwards still. Everything is a game of probabilities. There are some factors that move price action that are unpredictable. Random news events, random economic data, big whale purchases out of the blue, manipulation from exchanges or other big entities. These things can drive price and don't really show themselves on the chart sometimes until too late. But when we're looking at the chart and the data does reflect what the chart and price action is doing, because remember, everything, whether it be technical data or structural data, is a representation of price metric. Volume, momentum, speed, velocity, volatility. Those are the metrics we look for when trading. The drivers of those metrics, news events, political decisions, economic data, etc., etc. But we can't predict those. We can only assume what they're going to be. But what we can do is make assumptions and apply probabilities to certain directions based on the metrics. So when we're looking at price action, we're looking at the metrics. That's what we're doing. We're breaking down the metrics. If we look for a move upwards, we'll go zoom out. We do need to see two things occur. Number one, we need to invalidate this short-term structure, which is a symmetrical triangle. This needs to be invalidated. We need to break above it. Okay. Number two, we need to break and start closing for our candles above the POC level, the point of control. Okay. A very high level of resistance. If we can get above these high points, we can start closing candles. We could probably push back upwards. However, we're not going to talk about that too much. That is an unlikely scenario. If it does play out, we know we do expect the price to move upwards into this range between 30,800 to 31,000. So if it does happen, expect the price to continue upwards. While we remain underneath this resistance, expect the price to move downward. If we do continue downwards, we will inevitably break under $28,000 as explained by the measured move and break our target as per the symmetrical triangle. If we look at our VRPV, which is our visible range volume profile, it represents the historical trading orders in volume in a horizontal scale, okay? It tells us that when we lose 28,000, we can see we actually have a significant drop off in this horizontal resistance, okay? This price-driven resistance. That signifies a low resistance range or a low volume range, whatever you want to call it, one of those two things. It suggests that the volume requirements to push the price downward from the direction it breaks is lower than of which it requires to push through this chunk of a resistance. That means volatility will increase, and that means speed of price action will increase, that being momentum. Okay, so if we lose 28k, expect the price to gain speed, expect it to be volatile, and expect the price to move volatile with speed in that downward trajectory until we find a degree of support. We're looking at 9,200 to 28,800, and then we're looking at 28,400. So the short term is brewing a big move, and that is what we're looking for. We're looking for that breakdown, guys. We're looking at the symmetrical triangle formation on a smaller time frame. If we get back above here, if we invalidate all of this stuff, then we're talking again, once more, moves into this range, and we'll talk in another video if that happens, what we expect toward the upside, because that is possible, but we'll talk about that another day if it occurs. Until then, focusing on the relevant data. But like I said, guys, there's one more thing I want to talk about, and that is the macro charts. Because even if we see this move down, we did mention 28.4. Why is that level important? Let's go ahead and refer back to these macro charts. So starting on that keynote of 28.4, why is 28.4 a key level of weekly support? So to understand where our weekly trends lie, we need to first take a look at this chart. And I want to show you where the weekly uptrend began. The weekly uptrend began upon a breakout of this resistance, which I'm circling. This is a 300-day long resistance, as per now. When we broke above that level, that is when we flipped the trend into a weekly uptrend. So technically, we are still in a weekly uptrend while we remain above that level. Therefore, the weekly downtrend will start if 25.2 to 24.4k is lost. However, price isn't just up and down. It's not just uptrend and downtrend. We have weak uptrends, we have strong uptrends, we have neutral uptrends, we have weak downtrends, strong downtrends, and neutral downtrends. We have these shifts between strength in directions that are relevant. So 28.4 will represent a shift from a strong weekly uptrend into a weak weekly uptrend, a weak weekly uptrend, okay? It will represent that shift in strength. A loss of 28.4 will not destroy the weekly uptrend, but it's going to signify, okay, the weekly uptrend has potentially exhausted, and if that continues downwards, it could flip the entire trend. Now, 28.4 by no coincidence lines up with the Gaussian channel upper band, a keystone of support and an incredibly important level to keep your eyes on. A loss of that level will be potentially catastrophic for Bitcoin on the short term and could push the prices back down. Watch that level. Personally, I would not like to see that level lost in the weekly chart. Retested, no problem. Retest it all you want. For that level to be lost, that will really stir the pot for the bulls and potentially move the price on the higher time frame downwards. We wouldn't want to see that happen if we want to see the price continue upwards, okay? The next thing I want to talk about is going to be the weekly Ichimoku cloud. Now, the weekly Ichimoku cloud is actually green. We can see that it's about 25 bars in advance of the current price action. If we refer back to the 4-year cycle, we do generally see these phases, right? We have these uptrend phases where the price is above the green clouds, then we have this consolidation phase, and then we have this strong move toward the downside. We eventually end up breaking through the red clouds again, only to eventually end up going upwards in the higher time frame, just as what we have seen. If we take that Gaussian channel back upwards, we see a very similar thing on the Gaussian channel, right? We have the price above the green bands represents a high time frame strong uptrend. Moving through represents a shift into a downtrend. Below represents bottomed out, and then breaking back above represents from a daily uptrend to a weekly uptrend to a monthly uptrend, and then of course, etc, etc. So what we're seeing here, guys, is similar to what we have seen in the past. We have seen the price action pinch between the upper band of the Gaussian channel and of course the upper level of that Ichimoku cloud, leading span A, the lagging span A, sorry. So what we're seeing here, guys, is what we've seen before, but we do need to break above because the Gaussian channel is support, but the Ichimoku cloud is a level of resistance. Now, there's no coincidence that level lines up with 32,000. Again, an incredibly key level of resistance. Failure to break above that level could result in a rejection and a move toward the downside. However, a break above 32,000, as discussed in previous videos, will send the price more or less upwards, and upwards quite aggressively as it breaks through this low historical resistance range right over here. Okay, so between a rock and a hard place, a big move is brewing. Which ways are going to go? Let's take a look at the short term to find out. Okay, now let's go back to this chart over here. There's one more thing I want to talk about before the end of the video, and that is of course going to be the 4-year cycle in relation to the pi cycle indicator. Now, this is not really an indicator I use too much. I don't really care too much about massively lagging indicators. I think a lot of people look at lagging indicators wrong. They look at it a bit like they're expecting signals to be printed from indicators. Look, if you're using indicators for entries or for exits or for signals, you're always going to be late. It is lagging. You have to understand what is it doing and more or less the changes in direction, the shifts in the indicator, the changes in strength, and you have to trade the changes. You have to trade the shifts. When you trade the RSI, you don't trade from oversold to overbought. You know, sometimes assets can remain oversold or overbought for ages. You trade the shifts in momentum. The actual value on the RSI doesn't matter as much as what the RSI is doing. Same goes for this stuff over here, and that's why I don't really use it too much. But I guess a really important thing I want to show you is we are pushing between and slightly above our Bitcoin high short moving average and our low short moving average over here. We have seen this a few times in the past, and when we do push above these levels, we do generally continue upwards to retest that upper band, the high long band. You can see the high long band here. You can see the high long band over here every time we break through. The high long band in this instance is sitting around that dotted trend line, which is 48K. So now that we know that, I want to bring it back to this chart over here on our normal color scheme. It's a little easier to see. If we take a look at that horizontal resistance level, which is of course this instance, this instance, this instance, every time we get a monthly candle above, we end up pushing towards that dotted trend line, the dotted trend line being the dead cat bounce high of the prior bull market. So again, going off the pi cycle indicator here, we have got all those validation points. We are pushing upwards. We need to break above 32K. If we do break above 32K, it's a very high probability. If we go off prior data, we will be taking a move up to that high point, which is going to be around 48,000 before we get that rejection. I'm going to leave the video there. I hope you enjoyed it. Hope you learned something. If you've got any questions, leave me down below. Go ahead and sign up to VIP. We post so much in there. More importantly, if you want to learn how to trade, you can join us on Crypto Academy courses at gmail.com. We've got 127 students absolutely smashing it, learning from all walks of life and all levels of TA. We teach you the fundamentals that you need to build a solid foundation into charting, analysis, and trading. It's easy to teach someone before they've learned the wrong things. So get in there quick, learn it the right way before you learn the wrong things and make those big bad mistakes. Thanks for watching. Catch you guys tomorrow.